Hello and happy Monday. Welcome to another Money Monday with Purse Strings. All of this month, we're talking about, taking care of aging parents and kind of the cost that comes along with that. And one thing that we use a lot later in life is that long-term care insurance. And so today we're going to be talking about all of that and kind of how to use it and different things. And so if anyone's new here, Purse Strings is all about tips, tricks, pieces of advice on how to be financially fearless. And then when you're either taking care of your parent, you need your own will and trust, planning for retirement, getting divorced, just working on your budget, wherever you are, we have top tier financial professionals willing, ready, and able to serve you. We call those our Purse Strings approved professionals, and Laura here is one of them. So we're so excited to have her on today to kind of talk about long-term care. But before we dive into that, Laura, could you give us a little intro of who you are and what you do?
Yes, I'm Laura Warnock. I have been in financial services for 25 years. I think that's the number. I've been a financial advisor. I do work with small business owners as well as just doing some wealth management or planning for retirement. I do have, speaking of, I just kind of want to jump right into it.
Yeah, let's do it.
I did when I first started out, there were a lot more options for long-term care insurance.
Yeah.
And it seems like the marketplace has really consolidated. And I believe that's because people are living longer. Oh my gosh, right now. Can you hear my dog?
No, I can't.
Okay, I'm going to wake her up.
He's snoring up a storm.
Snoring, yeah. So, but I feel like people are living longer, and so the outlay for the insurance companies has been so high that some of the companies have merged or been bought up or just gone out of business altogether. Out of the business of long-term care, other insurances, but not long-term care. But for long-term care, there are a few things that you want to look for. There are different options in how you get your insurance paid for or how you get your care paid for. It could be a lifetime benefit. It could be a daily benefit. It could be a monthly benefit. And they call them just, so you have that bucket of money.
Yeah.
And sometimes you're not using that. Say you don't use a daily benefit if you have somebody coming into your home every other day or something like that, then you may be overusing on one day and underusing on another day. And sometimes they'll let you combine that and sometimes they won't.
Okay.
So those are some of the things to look for. I'm a fan of having either a monthly bucket or just a maximum that you can try to stretch out as long as you can.
Daily is it sounds very
It's
kind
very
of difficult
rigid
to manage.
It's very rigid, but they will, sometimes they'll express their maximum in a daily benefit.
Okay.
So they'll say, you get this much as a maximum and it breaks down to X amount per day.
Right.
So that depends. Like if you're in a nursing home, you're going to be using more per day than you would if you were in skilled care or having someone come into your home.
Right.
So those are some things to just think about when you're looking at long-term care. You can, they may ask you to jump through certain hoops if you're about to use your long-term care, which means activities of daily living. And I just pulled them up again. I used to be able to rattle them off, but I just pulled them up again. So if you have trouble eating, bathing, dressing, transferring, from a chair to a toilet, or transferring from sitting to standing, anything like that, toileting, or just moving and walking around.
Okay.
Sometimes in the policy, they'll have 6 ADLs, activities of daily living, sometimes 5. Anyway, so those are other things to look for.
So would that be when you start, you're like, should I use my long-term now? just Medicare long-term kind of covers when one of these six is starting to fail?
Yeah. Well, each policy will have guidelines for you to look at. So some of them say, well, you have to have three of the five, three of the
Mm,
six, or whatever. Then you can start using this care.
okay.
Um, or like for Medicaid, I had to look it up. Medicare Part A pays up to skilled nursing for 100 days,
Mm,
but only under certain conditions. Sometimes, if you have custodial care, like if somebody comes in to help you bathe, Medicare does not cover that.
okay.
So I think having some type of long term care, or at least a bucket of money reserved for long term care, is a good idea.
Yeah, definitely.
And now, I work with some life insurance companies. If you have a permanent life insurance policy, then they'll allow you to take up to, some percentage of your death benefit to use for critical care or long-term care or hospice, etc.
Okay. So since you didn't use that kind of before, you can kind of use those services now, or some
Mhm.
of them.
Yeah. Or, I think some insurance companies, on the life insurance side have realized that many people do prepare with their death benefits,
Hmm.
but I mean, if you're in a critical care situation and you have this death benefit, well, what good is it doing now? What good is it doing while you're living? And
Yeah,
how can we access that if we absolutely need to? So
definitely.
there are options with that.
I love that because yeah, you don't always. I mean, you can't usually use that money when you're dead, and when it goes to your family, that's great. But if you need it now, it'd be much better to use instead of having your family kind of front that money or something like that.
Right. Right.
And so I know, we're kind of talking about, let's say if mom went into the hospital or something like that, you know, is how do you kind of start using your long-term care policy? Do you call your broker? Do you call someone? Do you just go online? How does this kind of apply? Because we talk so much about getting it, but not actually using it.
Right. So if you have an advisor, um, that sold it to you or was a part of that process, then that would be my first call. If that
Hmm.
advisor is not in the business anymore, which can happen, um, then I would call the number on the policy, whatever the policy is, and
Hmm.
they'll normally have like a guide or an
Hmm.
advocate. Now, mind you, maybe that advocate, well, they represent the company, but they can tell you the ins and outs. But
Right.
I think it would be beneficial to get at least someone that can talk to you about the ins and outs of your specific policy. And
Hmm.
then, but it's also, you should have written down maybe an outline of what your policy provides and what your wait periods are, because there could be a 90-day wait period before it'll kick in at all.
Right.
Maybe 90 or 120 days, depending on the policy.
So it seems like some of the big details you might just kind of want to understand right away before you need to use the policy. And then some of the nuances, depending on your situation or whatever happens, you might then need to kind of look back into it um, to
Yeah,
understand, the finite details of what's covered.
yeah. So I'm really a bullet point person. So I want to make sure that when I'm looking through a policy, then I'll just bullet point the highlights and what I need to know going into it, so that if something does happen, I have somewhere a bullet point of, yes, I do need to wait 90 days, or I do need to wait until, um, this person moves from the hospital to a nursing care facility or
Yeah.
to an assisted living facility, and
Right.
then it'll kick in, because they all do have their specific triggers.
Right. And that's always the thing is you have to be right in their nuances right there.
Mm-hmm. Mm-hmm.
And so, what does Medicare provide versus if you didn't get the kind of, long-term care insurance or something like that? Um, does that then just kind of fall on the family? Because I know sometimes people think Medicare is just going to take care of me in my later years.
Right. So Medicare will cover skilled nursing, but it won't cover custodial care. So it's not going to cover somebody coming into your home, which is typically what people want.
Mm-hmm.
I mean, not all the time, but if you had your choices, at least my parents did, they would like to stay in their home,
Yeah.
and have care come into their home and help them if it's a couple times a week to help them with medication or every day to help them with dressing and eating,
Mm-hmm.
um, whatever it may be. That's the kind of stuff that long-term care insurance could cover if you're lacking in one of these ADLs, activities of daily living.
Okay.
And Medicare doesn't cover that. They'll cover hospitalization. They'll cover, I had to, print this out. They'll cover 3 days. You have to have been hospitalized for 3 days and required skilled nursing as a result of that hospitalization. And then after the first 20 days, then the individual may be out of pocket.
Okay. Yeah. So those daily living activities are definitely ones that I feel like you don't always want your children to be doing for you. That's quite a boundary of, wiping yourself, getting yourself dressed. I'm fine coming over and helping you manage your meds or, sort them for the week. But it seems like this is kind of the coverage you want. So your kids don't have to be that, in home, on hands caretaker.
Right. Plus, so personal story, my
Yeah.
mom became bedridden and my dad started taking care of her. And it was so hard on him. Like he aged so quickly just because of it's just the activity and the stress.
Yeah.
And and so if you decide that one of your family members is going to be a caregiver, you may want to look and make sure that your long-term care insurance will cover respite care, which means whoever's caring for you needs a break.
Yeah.
Needs a break. And so will you pay for someone to come in and take care of things while I'm taking a break? So there are plenty of families that decide to do it themselves.
Yeah. But yeah, it's always we need to make sure there's enough care for the caretaker because they put a lot out and need to really fill their own cup.
Mhm.
Especially if your parents were closer to the same age. I'm sure it was not,
It
someone
was not
young and
easy.
sprightly really lifting her up or helping her out. It can become exhausting just because that's not what you're used to doing anymore.
Right. And if it's something like Alzheimer's,
Mm-hmm.
that's something where that could last a long time.
Mm-hmm.
So you may want to have a family member, somebody, or have that person with Alzheimer's. At least in my family, I had a uncle that moved in with a cousin, and that lasted 20 years.
Oh,
20.
yeah.
So that was kind of a long thing. So you just kind of want to, and I feel like that was an outlier, right?
Mm-hmm.
But things can happen where you look at this bucket of money and you think, okay, how can I make that last the longest?
Yeah.
Is there somebody in the family that's willing to, if your family's big enough, mine's huge. If your family's big enough, you may have like a nurse or a somebody that's willing to be paid by the family
Right.
and get like free housing or I don't know, whatever, to move in with this elderly person and take care of them because you really need that money to last as long as possible.
Right. Right.
And that's I think another extreme, but just when you're walking into a situation where you have a long-term care need, it really is good to sit down and assess um, with an advocate or with your advisor, or with some sort of specialist, that just assess what your needs may be.
Mm-hmm.
What buckets of money do you have to draw from? Um, in my world, if I'm talking to a couple and we have Roth money and 401k money and we have long-term care money, we're trying to make sure that money lasts a long time, and that we're
Mm-hmm.
not pulling all this money out of their 401k so that their tax bill is huge. We take out some Roth money. We're just trying to massage all the different types of income to make sure they're taken care of.
Which to me is like always when like you have to work with a financial professional because none of the dollars are quite equal, 100 cents here and 100 cents there.
Right.
And it does matter what buckets you pull due to taxes, due to, you know, I don't know, some other things, I'm sure. And so it's kind of like, what bucket do you pull from? You own the house, you own the whole house now. Okay. So can we take money out of the home? And so having someone with those different ideas of knowing what to look at and what kind of your situation is now, and then might be moving forward. I'm always like, that's why you need a professional, is because there's so many wheels intertwined.
Right. And it's good just to have a team,
Yeah.
right? So you have your financial advisor, you have your CPA, and then you have your care advocate,
Mm-hmm.
all working together to make sure this person is taken care of in the best. I don't know if I want to say the most efficient way. Um,
Stress-free, maybe. I mean, because you don't want to go back and forth and be hunting down
right.
people and to send a document over 8 times. They still didn't get it.
Right.
You want to
Right.
work on your healing or whatever you can kind of, on your care, whatever that is kind of at that moment.
Right. So I also wanted to point out some of the options for getting long-term care insurance. There are still some standalone companies that do long-term care insurance. There's also the hybrid of long-term care insurance with life insurance.
Mm-hmm.
Then there's also some life insurance that has a rider.
Can you explain
Some,
what a rider is?
and it's just a rider is something that you add on to a policy to take care of a specific need.
Mm.
So, say if I get permanent life insurance and I have a, a a kid rider, right? So I can add life insurance for one of my kids or both onto that life insurance. Or
Okay.
the life insurance has a rider that says, oh, if you get permanent life insurance and you want to turn on income from this permanent life insurance, then that might be a rider.
Mm.
Or um, they'll give you certain deals on how your cash grows within, and
Okay.
that could be a rider. One of the companies that I work with, um, every single policy has that long-term care, critical care. It's not an extra rider. It's every single policy that they put out.
Oh, that's nice.
So it's really nice. Um, then there's annuities. Annuities could have a long-term care rider as well, or a way to access that money differently.
Mm-hmm.
Because sometimes annuities will say, yeah, if you have this with us for 7 years, then you can access 10% of the money without penalty, blah, blah, blah. They have all these rules and hoops
Of
that you
course.
jump through, right? But if you have a long-term care rider, or if they have some sort of long-term care um, trigger,
Mm-hmm.
you know, then you can turn on that trigger, and it's a different policy. But it
Interesting.
usually has something to do with the ADLs
Mm-hmm.
and a note from your doctor, that that kind of thing. Anyway, so there's lots of ways to try to get long-term care insurance.
Mm-hmm.
um, you just have to maybe figure out what's best for you.
Yeah, definitely. And for long-term care insurance, you can typically go to your financial professional to get that. And then there's also long-term care specialist as well, right?
Uh-huh. Yep.
Um,
Sometimes your financial advisor will work with a specialist,
got it.
so that all the ins and outs are, because your financial advisor can't be a specialist in all areas.
Yeah.
And some like to think they are, but not the case. Um, so they'll team up, say with, um, there's like an elderly caregiver specialist.
Hmm.
In fact, there is one in this group. But anyway, so for the long-term care, um, yeah, your advisor will know where to go
Where to
when
go?
you
Yeah.
if they care.
Yeah,
And
definitely.
some don't want to touch this, right? Some don't.
You got to know
But
your boundaries.
right, right. And if they don't want to touch it, they should find, somewhere to refer
Definitely,
or a
definitely.
specialist to bring into the conversation.
And so were you finding that, yeah, I know you kind of started saying some of these long-term care plans are kind of going away and they're kind
Yeah.
of, do you think they're gonna come obsolete? I know it's kind of just like a future guessing question. Um,
Well, they're just
where,
so expensive.
yeah, because we
They're
are
so
living so
expensive.
much longer.
Yeah. They're so expensive, and so it kind of prices people out. Or if you start looking at long-term care insurance when you're uninsurable,
Yeah.
that's a problem.
Hmm.
So then if you're uninsurable, then you need to look at, um, like, do I have term insurance that I can convert into permanent? And then if I convert it to permanent, will that provide me some sort of coverage?
Hmm.
Or do I want to put money into an annuity, because you don't have to be, um, insurable to have an it's not a life insurance contract, it's an annuity.
Right.
Um, so there's an option there. It just depends on when you're looking.
Definitely. Yeah, that's the magical thing about life insurance is you have to be healthy while you have it or while you get it. And so I know some people who get sick and then they're like, I should probably get a life insurance policy. And it's kind of like tough luck, Chuck, which is
Yeah,
hard because we tell people to be proactive. And a lot of times you think you have longer than it is. You never know what's going to happen, which is always, the weight of life. And that's insurance for you.
yeah. But then, again, if you have a relationship with a financial advisor and you go to the financial advisor and you say, okay, now I'm ready for life insurance, or I'm ready for whatever it is that you're looking for, and these are my issues. And then you let them know, like, I
Hmm.
was diagnosed with cancer 5 years ago, this type of cancer. I, have diabetes. I have high blood pressure. Just say these things to your advisor so that I, as an advisor, can say, okay, I'm going to go shop that
Yep.
and see what coverage I can get you. Because there are certain companies that specialize in one thing and or another, or have ratings that will accept people that were diagnosed with a certain type of cancer, or
Right.
it just depends on the situation.
You got to discuss your options. You got to bring it to the table and just not say like, "Oh, I had cancer, I'm out," because that's not always a hard draw either. I mean, there's always so many in between, so many differences, and so it is kind of a whole process. You need that team you can trust and feel comfortable with, sharing with them which you have been through. And we would say, you get financially naked, but you also, you share some of your health problems and things like that. And so you have to be really comfortable with somebody that you're talking to and feel like you're in a safe space to kind of share this information.
True, but when you get financially naked, um, everything that's around a person affects their finances.
Right.
So your health, your family, extended family. Are you going to have to take care of your parents?
Hmm.
Do you have, a kid with special needs? Like, everything around you has an effect on your finances. It's just not, let's have a conversation about my 401k.
Right.
That's not, that's, that's just not where it ends,
Yeah,
you
it's
know?
huge.
Yeah.
Yeah.
Or, I just had a client whose son was in a surfing accident, And now they're taking care of him.
Hmm.
Like, yeah, he became a paraplegic. So,
And that's huge life change. You have to redo your whole financial plan almost.
mhm. And then
Yeah,
they're combining now his finances with
right.
theirs and trying to figure out that whole picture and trying to get him taken care of. And then also making sure that he's okay
Hmm.
after they're gone.
Yeah,
I mean, there's just so much. You just
there
need
is
to
so
be able to
much.
be open and honest with your financial advisor, someone that you trust, and hopefully you have someone that's not going to be judgy. I have run
That's
across that, which seems weird to me to say, but it happens, sadly.
that's why we're all. That's I mean, that's not what we're all about here at Purse Strings is being judgy. That's so wrong. That's exactly what we're not. Is
Right.
against this judgment, against the harshness, because we know it's
Right.
a vulnerable conversation. We know it's hard, and there are those judgy people out there, those people who say, don't worry, sweetheart, I've got it. Like, no, that's not the fit for you. That's fine.
Right.
You can move on. Um, go to someone like Laura who you do feel comfortable with, who can share this and they feel sympathetic and they understand where you're coming from and understand that, you have a lot going on as well.
Yeah. And you should also know that things that you say with your advisor should be private.
Yeah.
Like I keep reminding my clients and and referrals and whoever comes to me that whatever is said in this meeting is private.
Right.
And if you want to bring somebody into this conversation, then you need to let me know in writing
Mm.
that you want that person in on this conversation, even if it's spouses.
Yeah, I love that.
So, if I'm talking with one person about, and I know spouses should share, but sometimes they're not comfortable.
Hmm.
Or, if I'm talking to one about an IRA and I can't talk to the spouse about that person's IRA even because they're not on the account. But I
Yeah.
can talk to them about their whole picture.
Right. Right. Yeah, there's a lot
Anyway,
there that you can't share.
yeah. So yeah, so health issues should should be open, hopefully,
Hmm.
so that you can plan for different things and that your advisor can go shop and try to find you the best solution to your needs.
Hmm. Hmm. That's awesome. So yeah, I like that you kind of, you really brought up some great points of what to look at when buying your policy, and then some major things just kind of highlight that right before you use the policy. If you have to wait a certain amount of days, just some of those main bullet points. Is there anything that we didn't touch on today that you want to make sure is shared?
Oh, this just popped. Some policies will cover a non-certified person. Like
Mhm.
they'll pay something to have a helper come in, and some won't. So look at that.
Yeah.
So that if you have somebody coming in and they need to be certified or from a service or certified in some way in order to jump through all the hoops to get your reimbursement, um, make sure you jump through those. You don't want to have, your niece or nephew coming in to help you do whatever and then have it not get paid for when you thought it would be.
Right. And so just kind of going off that point, does long-term care usually reimburse you for what you put out, or would that just be kind of like in that internal situation?
Typically, it's a reimbursement
Okay.
unless they pay um, directly to the company, but it'll typically be a reimbursement, and you just have to keep putting in your. Let me see. I do have a list of file a claim, arrange care. Yeah, it's just submitting ongoing claims,
Okay. Interesting.
so that you have to, if they're paying somebody directly, say um, it's a care facility, either skilled care, nursing care, or um, what's the word I'm looking for? Nursing home versus
Like in
assisted
home
living.
assisted
Assisted living.
living.
Yeah. Um, so typically, sometimes they'll pay direct,
Yeah.
which is, great. Um, but you do need to keep going back, improving that when you're there,
Hmm.
and that you still have the need, and etc. So you have to keep on top of that.
Well, I'm glad I asked that because some reason I thought you got access to this lump sum, which is good to know that it's a reimbursement process. It's not just like here's your bucket, here's the key.
Yeah. Well, typically with long-term care, it is either reimbursement or a paid directly.
Okay.
So yeah, that's one thing to know as well
Yeah,
going in.
definitely.
So you know whether or not you're having to pay, and then what's typically the lag if they're doing a reimbursement. That's an important step as well.
Yeah, yeah, because you need to have some of that cash up front still.
Mhm.
Even though you pay for these policies and different things like that, you still need a little bit of that cash up front.
Well, you still have that waiting period. It's either
Hmm.
called a waiting period or an elimination period. That's 60, 90, 120 days
Mm-hmm.
that you have to pay for out of pocket before the long-term care will kick in,
Wow. Yeah.
depending
So
on the policy.
it's a whole plan. It's a whole picture.
Yeah.
And get someone to help you with that photo. It will make it much easier. I promise.
Yeah. Yeah.
Well, thank you, Laura, for coming on and sharing your expertise and giving us some of your true stories as well. Those are always great to hear.
Yeah.
So if anyone has, more questions or interested, please reach out to Laura. Her email's been going through the bottom. She's also one of our Purse Strings approved professionals. So you can reach out to her off our site, pursestrings.co. And yeah, let's talk about it. Let's make a plan so we're prepared for whatever is thrown our way. So thank you again, Laura.
Well, sure. Thanks for having me. I hope it was helpful.
Yeah, definitely. We'll talk to everyone soon.
All
Bye.
right. Thank you.